Hey, what's up, everybody? Good morning. It is Saturday morning, and this is Multifamily Unplugged. And if you're in the right place, we're going to talk about multifamily and multifamily lending today. A conversation that everybody needs to have right now in where the market is at. So, and if you're joining us for the first time, I'm glad you're here. Thank the person who told you about this program and sent you here, but I would love for you to be a follower. If you're listening in on Facebook this morning, please join our Multifamily Unplugged Facebook group. And if you're on YouTube, just hit the subscribe button so that we're continually putting good content in front of you. You know, my goal is every week that I bring on a great guest, somebody to teach you something or encourage you in some form or fashion that's going to help you grow your business. You know, we talk a lot about our goals and our dreams and how do we get there. Well, I'm always trying to bring content and people in front of you that are going to help you do that. So by being here every week or going back and listening to the recording in the group, you're going to be able to get that. If you're on social media and you found us on social media, like us, love us, tell the world about us, would you? Love that you're here. And if I can ever do anything for you, don't hesitate to reach out. Hey, I'm super excited about this morning. My guest, Mark Ritter, he's calling from North Central Pennsylvania. He's with a company called MBFS, and they're a real estate investment loan company that deals with credit unions. This is a different type of lending, and this is going to be enlightening for me as well as for you this morning. So let me bring Mark in real quick. Hey, Mark, good morning.
Good morning, Mike. Thanks for having me.
Yeah, thanks for being here. How are things in North Central Pennsylvania?
Cold and cold this time of the year. I live, I moved from the suburbs and moved out to a county where we have 5,800 people in the whole county.
Oh, geez.
So the summertime is gorgeous, and the fall and the spring and winter can sometimes sometimes it feels like The Shining up here.
Do you guys have a lot of snow?
Some of it's melted, but we did have a lot of snow earlier in the year, so I'm looking forward to the spring.
Yeah, aren't we all?
Yes, absolutely.
Hey, so as we get this thing rolling, one question I always ask all my listeners or all my guests, and is in one word, what best describes you personally and professionally?
Sure. Probably both, personally and professionally, is I'm kind of level-headed and easygoing. During the boom times, I don't get too excited. And during, the ebbs of that we have, I don't worry too much. So I try to keep, good times ahead and just improve the company and myself a little bit, every single day instead of, the boomers and busts that we sometimes live in our real estate world.
So what would you say? You're just kind of neutral?
Yeah, that's a good word, neutral.
Okay, good. You think you've always been that way, or were there things along your path that caused you to, just figure I got to accept it the way it is, right?
Like many people, I think my wife and kids have tempered my expectations a little bit, and keeps me in check. Probably when I was a young single guy, I was a lot more volatile and getting excited about every opportunity and jumping ahead and moving forward. And as we all get a little bit more wise as we get older, I tend to keep a little bit bigger perspective on the universe.
Yeah, nice. Good for you. Well, let's talk a little bit about your background. Tell us who you are and,
Sure.
how you got to doing what you're doing today.
Yeah, sure. My name's Mark Ritter, and currently I'm the CEO of MBFS, which stands for Member Business Financial Services, and grew up in Northeast Pennsylvania, about an hour from where I live now. And really, and that is as the coal regions, steel mills of Pennsylvania, real kind of blue collar background. And after I went to school at Penn State, I started really getting into the world of finance and lending. But what I found is that I really enjoy much more community-based banking, community-based lending, and getting to know people much more than, I didn't want to be in Manhattan dealing with on Wall Street and the big finance world. I like communities where I can help make an impact. And about 23 years ago now, I feel old saying that, I got credit unions when I was looking for the next opportunity in life. And at the time, credit unions did virtually no business lending. They really didn't help out real estate investors. They didn't help out small businesses. But there was a change in the law that really moved that forward. And I got hired by a credit union to launch their commercial lending program. And we did quite well there. I was there, 10 years. And then a while back, probably about 12 years ago now, was hired as the CEO of MBFS outside of Philadelphia. And, I just moved to the country here, but I was, in Philadelphia for quite a while. And what we are is what's called a CUSO, which stands for Credit Union Service Organization. And, everybody on here has dealt with banks and lenders, but think about it this way. What the credit unions did was, instead of every lender and institution going out and hiring their own loan officers and origination people and underwriting and buying all the systems and documentation software, they formed companies like us to really be an aggregator for the credit union industry. So we've really built up this company, and we're owned by 13 credit unions, but really we work with over 100 credit unions nationwide, just on primarily real estate lending. We also do some small business lending in there as well, but a lot of different asset classes. But really about a third of our business is multifamily.
No kidding. And when you talk about multifamily, are you talking about 2 to 5 unit residential, or are you talking about 5 unit plus commercial? And how big can a credit union typically go?
Sure. We do the smallest of the small. You have a job and you're looking to kind of get in that foot in the door, kind of the 1 to 4 unit properties, smaller units, and we've done up to $28 million loan transactions, and everything in between. So we really fit the spectrum.
Okay, interesting. And are the loan structures, typical to what you would find at a bank or Fannie and Freddie?
But typical to what you'd find more at a bank. I would say, being a credit union, much like a bank, when we lend money, we expect to be paid back. We're as crazy as that sounds, we're not the hard money lender. Give me the property address and I'm going to fund you at 20% tomorrow. But really, I would say the difference is why I enjoy this is, the financials have to make sense. Just like anybody else, the financials have to make sense. But one thing that I really am proud of with credit unions is we also take the time, being that we are a credit union, which many people don't even quite understand the differences and what exactly we are. But we also can take the time to understand you, who you are, what your plan, not necessarily this particular project that you're working on, but where you want to go. What's your business plan? What's your growth strategy? Really, where do you want to take this business? And many people, we find, are expanding their horizons and geographic areas on where they invest in and where they manage properties. So in credit unions, you'll find tend to be, have that profile more of a community bank where they're lending in a region. So we help bring the credit unions together. If you're an investor in Pittsburgh, but you're buying a property in Florida, well, we flip you to a credit union in Florida who's local to that marketplace, and vice versa, and really help bring credit unions together, because that's who we're owned by.
So is it more platform lending than just one institution?
We do a lot of participation loans and syndication loans by bringing people together. Most of the time, the borrowers don't even know that.
Yeah.
Your typical credit union is, probably in today's world about $275 million, where they have, a few $1,000,000 of capacity, but it's not unlimited resources. So really, that's what we're doing. Is, you're getting that local touch, local lender. You get to know who you're dealing with, but also, we bring the financial backing of the credit union industry to real estate investors.
Yeah, so I think that's pretty interesting. A lot of people don't know that about a capital stack. And, when you have a loan that's 20 or $30 million, one bank might not want to take on all that risk. So they split their risk. I know that we've done loans before on the capital stack where Bank of America took a piece and Jones Lang LaSalle took another piece, just to spread that risk.
Yeah, we do the same thing, and except just within the credit union industry. And, in today's world, a lot of people, yeah, like you said, they may know who's the lender on the paper, but they don't know where the actual money comes from, which really makes a big determination in your rates and terms and what you're getting with, because that's one of the advantages of credit unions.
Yeah. So let's talk about that a little bit. What types of loans are they? Are they fixed rate? Is there floating rate debt? What types of terms can you get?
I'm going to say 99% of our loans are fixed rates.
Okay. And then are they like 30-year AMs with 10-year balloons, same typical structure?
Yeah, most of the time we're seeing balloons in the 10 to 15 year range. We see up to 15 years. We do see up to 30-year amortizations depending on the age of the property and the condition of the property. A new construction or a brand new build, some sort of new renovation, you're more likely to get 30 years.
Okay.
So one of the oddities in the credit union space is that nothing we do will have a prepayment penalty. So, which as you go up the food chain, that becomes considerably more important. 3 years ago, if I told you have a prepayment penalty when your late rate was 3.25%, nobody cared. People said, "I'm never paying this off, so have fun at it."
So
but in today's world, it matters.
And will a credit union look at the structure the same way? So like if I'm syndicating a deal, will they look at the deal over the borrower from the first place?
Yes. And as you move up for a larger deal, that is indeed the case. For smaller transactions with a newer investor, we're really looking at the people and behind the transaction as much as the property. And then there's that sliding scale of once you start moving up in size and complexity, the transaction becomes significantly more important than the people behind it. So.
And how long does it typically take to get one of these loans? Like I know I can do a Freddie Fannie loan in 90 days, maybe 120 days. A HUD loan might take me 180 days, right?
Yeah. Ours have a much quicker turnaround, much more traditional that you would see with a community bank. Many times you're seeing decisions within a 10 to 14 day time period on the long end. And then it's just a matter of the closing and title work process. But we have, credit unions, it's really a not-for-profit co-op, and they're lending their own money. So you don't have, they're not borrowing your money to lend out, borrowing from Wall Street to lend out and going through different agencies. So really they're lending their own money and can be a little bit more nimble than some of the other options.
Got it. Interesting. And how about assumability? So if I have a credit union loan, and 5 years down the road, I want somebody else to assume that because I want to exit that property, are they assumable?
No, generally we'll have to do that as a refinance, and the reason being is 1/3 of America belongs to a credit union. So many people who are listening right now are members of a credit union, and to open an account at a credit union, you have to be a member. So, and that's a requirement of the law. You have to join the co-op as a member. So we can't just make it assumable because we have to make sure the people who have the account are a member of the credit union.
Do I have to have an account at a credit union in order to get a loan?
Yes.
Okay.
Yes. And really that, my father's credit union from his factory, 30, 40 years ago, it was, it used to be, when you saw a credit union, you had to work for a particular group. You worked for a school district, a local government agency, maybe at a military base. But the credit unions that you drive by today, I'm going to say they're probably 95% of them you could walk in and open an account at today. So generally they're much more open. And to become a member, many times it's just a modest deposit of, $10 to $20.
Yeah. So that's interesting. And do you have to be a seasoned member for a period of time before? No, I could open an account today and apply for a loan tomorrow.
Yep. And that's what many people, their first experience with a credit union may be a car loan.
Okay.
They're at the dealer, they open a membership account there, and they now get credit unions do a large percentage of the auto finance industry. So you can do the paperwork on the fly, become a member, and it's more of a formality at this point.
What about rates?
Sure. Generally we're looking at, most of the time we're looking at 5 to 7 year rates. A couple years ago, we were getting into the 10-year fixed rates. You can't find those today. Most like today, we're really seeing rates for most properties in the, we're seeing them into the 6.5 to 7.5 range, depending on the type of property.
Okay. So what's my, I guess one of my questions would be, what would be my advantage there?
Sure.
Because I could do a Freddie loan today, maybe for 575,
Yeah, generally your agencies are going to have always have better rates than what we do.
Sure.
We're really competing with the own money and the bank rates for things that do not qualify for agency debt. Things that don't qualify for agency debt, it's not, for whatever reason. And for maybe it's the size, maybe it's the debt to equity. We usually finance a little bit more. Many times we're sometimes in the 70-75% range. And so it's really just that non-qualifying properties from the agencies.
How about vintage of product? Will you guys finance a value add 1970s product versus a, of course, everybody finance a 2000s product, but.
Yeah, absolutely. And that's really where you get into the advantage of credit unions being able to have that conversation about the micro level marketplace that you're in. Not everybody finances, 200 units next to the train station that's, just built 10 years ago,
Right.
That's not every property. That's not every investor, So really we can help fill those gaps of maybe it's the location, Maybe it's the town, maybe it's the age of the property, that we can really make and understand what's going on, why it makes sense. There's a lot of really high quality deals and quality credits out there outside of the agency financing. So we both have our place.
How about savings rates?
Well, credit unions, about 90% of their business is consumer. So credit unions are not-for-profit cooperatives, and they will typically give you what they do is they give people higher yields on their money and try to be very fair in terms of loan rates, fees, transactions, flexibility. That's what the cooperative is for. So it is truly a relationship-based institution. So we do those real estate transactions, but we hope for those relationships. So absolutely, credit unions are very flexible and usually a little bit higher than the local competition.
Are you ready to skyrocket your investment portfolio and leave a legacy? Are you tired of inconsistent returns received in the stock market? Then it's time you take a look at alternative investment options like a passive investment in multifamily real estate. No tenants, trash, or toilets, just a solid return on an annual investment, including quarterly returns along the way. These lower risk and secure assets are also a great hedge against inflation. If you want to hear more about these types of opportunities, email me directly to schedule a 15-minute consultation to see if you qualify. You can email me at mike@mycoreintentions.com.
So, my understanding, and you may have covered this a little bit earlier, but is that it's easier to get a credit union loan than it is to go to a bank or to go to an agency.
Oh, absolutely. Absolutely. And I would put us, I wouldn't want to wave the flag that we're the easiest credit in town with just an open bag of money to come in and take what you want. But I would put us against anybody in terms of flexibility. And when you think of some of the agency debts and some dealing with some of the big banks, it goes into a box. Here's the numbers, here's the rules. There's a yes or no, and it spits out your answer. That's not us.
Yeah, interesting.
We're going to look at it holistically, and it may shock some people, but we're going to actually ask some questions and want to get to know you. And who you are and your experience behind it, and get to know, the people behind it as much as just spitting out an answer.
Well, that's interesting. What would make a credit union say no?
The first piece it comes into is ineligibility, where maybe it's out. If you're a credit union in Montana and you call them and say, I got a property in South Carolina, they'd probably say, that's not us. So really it kind of has to fit that culture, but that's where we help out. Second would be, if there's a sponsor behind it with, kind of an unsavory past, even though the property may be good. If you have kind of an unsavory past, that we can't get through. And really past that, it would be the debt service coverage.
Again, what do they look for in the DSCR?
Yeah, typically we're looking at your standard 1.2 to 1.25.
Okay, great. And what about refis?
Oh, we love refinancing. Yeah, we do a lot of our business is refinancing. And one of the flexibilities in today's higher rate world is just that people can refinance it, they can move, and they can move the debt around as they see fit because you're not being penalized.
Sure.
As you know, when you go to some of the agencies and you go to some of the Wall Street financing, they're really borrowing their money and lending it to you. So that's why they lock you up with prepayments and pretty strict covenants. Whereas the credit union, we're really lending out the money from other people. It's kind of like the movie It's a Wonderful Life. Everybody's kind of, has their money in there and you're lending it out in the community. That's kind of what we do.
Yeah, interesting. And how does a credit union look at, when you talk about unsavory past? What are some ideas or examples of unsavory past?
Yeah, really, some of those, if you have federal tax liens, bankruptcies, if you stiff people on some other real estate projects, those are the types of, kind of basic credits that we're working for.
Sure.
If you lost your job and it's explainable, we look for trends. If you had a bad event, we've all had life events. And if that was a one-time bump in the road and everything's been fine, well, we can explain that and tell that story. If it's, a trend, well, sorry, I might not be the guy for you.
Yeah. What if somebody had a felony?
Depending on the circumstances, it would be kind of case dependent, I would say. We much like the SBA, when you get an SBA loan, if you check that box of being arrested or a felony, it kind of kicks it out into a lot of questions and due diligence. And, it can be a wide variety of answers from there.
Got it. Hey, how do they look at syndicators? So, I go raise my equity on a deal. How does a credit union look at a syndicator?
Sure. That's quite common for the larger credit unions. Larger credit unions and kind of maybe the top 100 credit unions. If you go to, Farmers Credit Union in Southeast Ohio, that's 100 million in assets, you're probably not taking that deal to them and they're probably not into it. But there's a lot of, kind of that credit unions probably in the 5 billion and up category. That would be more their line.
Got it. What about, I want to go back to the account conversation for a minute. I get a loan at a credit union. Are they going to want me to have my operating accounts there and escrow accounts and all that?
You sometimes we usually will ask for the operating account. In today's world, 3 years ago, everybody was swimming in money and they said, please, just keep it where you're at. You're just hurting us. In today's world, it helps to get the deals done to move that, but it's not necessarily an absolute.
Got it. Are credit unions paying better, interest rates today on CDs and saving rates and money markets, things like that?
Yeah, that's really our bread and butter. That's really the industry's bread and butter. And if you think about it, if you look, the difference between a bank and many banks and even the agencies, if you look at a credit union's balance sheet, for every dollar of deposits that they have in there, they lend out about 88 cents of that dollar.
Wow.
So it's not, leverage 10 to 1 like many of the other industries. That's why their cost of funds tends to be a little bit lower than some others. But conversely, they also have that because of that structure. They also can pay out a little bit higher in deposits. And also credit unions tend to be very fee adverse.
Let's talk about fees. The $10 million question.
Yeah.
What's a typical cost if I was to go in and get a $10 million loan?
In today's world, on the smaller side, it's almost always just 1% in straight costs. Appraisal, title work, and then a simple origination fee beyond that. But nothing, not too much more than that. And as it gets a little bit bigger, you sometimes have a little bit more negotiating room.
As you're doing it, and that's a 1% fee to the credit union for doing that.
Yep.
And And then you being a broker, how do you get compensated?
So we're owned by, and sometimes people call us a broker, and I sort of wince a little bit like that.
Okay, good.
So remember who we're owned by. We're owned by the credit unions to help them get this deal done.
Gotcha.
So we get paid for, much like an attorney, we get paid for underwriting the transaction. We get paid for the documentation. We're the servicing agent. In some cases, what we might get a share of that origination fee because you're dealing with our lenders. So really, you're not paying us separately. The credit unions want the loan, and we just help facilitate that, much like any other back office operation.
Interesting. Well, Mark, this has been a great conversation. Tell people how they can get a hold of you if they want more information about you, your services, credit unions.
Sure. Would love to. And what we love to do is, if we don't have a credit union in your market, we try to help match you up with another company like me or an individual credit union. And because really, we think everybody should have access to a credit union. So go to mbfs.org. You can also search me up on LinkedIn, and we're very active on LinkedIn. If you want to connect with us and send us a direct message on there.
This has been awesome. A couple last questions. So I always like to lighten it up a little bit at the end, so some bonus things. What's the best book you've ever read?
Oh, I'm a big Freakonomics fan. The whole Freakonomics series. I love that.
That's awesome. What was the author's name of that?
Freakonomics. Stephen Dubner.
That's right. Yeah, that was huge a few years ago. It's cool though.
I still listen to their whole podcast series and keep up with all their new material. So
yeah, interesting. And how about, now that you're living out in the country, best tourist attraction out there by you?
So I live by the most beautiful state park with the most gorgeous falls trail, and also it's called Ricketts Glen State Park. Anybody who's been through Northeast Pennsylvania, it's a must see. And Pennsylvania has a hidden gem of amusement parks called Knoebels. Which matches any. I'll go to Knoebels over going to Florida any day, over any park in Florida or California, and it is the most magical place on earth. Nice,
good for you. Well, Mark, I really appreciate you being here this morning, your time and your knowledge. I'm going to encourage my listeners, next time you're underwriting a loan, underwrite it these terms, and take a look at maybe doing a credit union that might be a little bit easier, especially for a newer with some experienced investor.
Absolutely.
It sounds like.
So yeah, we would love to help out people on all spectrums, whether you're a little bit newer, starting out, up to one of the more seasoned, experienced people. We deal with everything on the spectrum in a lot of different markets. So thank you.
Yeah, I appreciate it, Mark, and thanks for being here this morning. And I know this, that the next deal we do, we might send it over to you to underwrite and just take a look at it and compare the ease versus the rate in that. Because a lot of times I tell people, I say, hey, if you can save a couple of bucks, it's great. But if it costs you a little bit more, but it saves you in time and effort, you might be better on the time and effort side.
Cheapest isn't always the cheapest.
That's right. I agree with that. Hey, thanks for being here. I hope you have a great weekend. And I encourage my listeners to reach out to you. Hey, everybody, remember, we're here every Saturday morning and bringing you great content. And I hope this morning was informative for you. And I'm going to suggest you go back, you listen to this again, pick up some of those golden tips that Mark left for us and how to use credit unions in financing your next multifamily. Have a great weekend, everybody. Look forward to seeing you soon.
All right. Thank you.